Good evening. I am going to be in Dubai in the last week of February. My team wants to do an event between 24th and 25th of February. There are going to be two events, one on the 24th and one on 25th. Those desirous of attend the event, not only from Dubai, Abu Dhabi and Sharjah, but from the rest of Emirates, can contact my team at the phone number given below. The WhatsApp number is also given below. There's an email ID and there's a Google form. You can use any of these methods to connect us, and my team would be glad to help you. See you in Dubai.
Hi everyone, welcome back to Be Rich. Recently we spoke about Bank of Baroda and the scam in Bank of Baroda. Anand had also spoken about it and how giving loans for no gold, that was the scam because the banks were under pressure. So we spoke about that in great detail and why that happened. And we said this can happen quite often in public sector bank managers under pressure. Now it's come unearthed a new one, which is in the private sector. And our friend ICICI Bank seems to be the person behind this or the victim of the scam, this ICICI Bank. What happened in Rajasthan was there's a bank manager who had to meet certain targets for FDs. So new FDs had to be every month he had a certain target to meet. And if he meets these targets, the bank managers are incentivized, by getting a bonus or whatever the scheme is. The manager is eligible for all this. One is his job security. Second is a salary increment. Third is if he does above and beyond the required targets, he gets actual bonus, cash bonus. So there's huge motivation for these guys to perform. And now, thanks to social influencers and people like Anand who are out there, the general public has become more and more aware that FDs give the worst returns, that it doesn't even beat inflation. And in the generation, my generation and generations younger to me in the workforce, are less and less prone to putting FDs and less reliant on creating FDs anymore because FDs are just doesn't make any sense. Even having liquid cash, you rather put it in a gold ETF so you don't lose to inflation, and you can always sell the ETFs immediately and take the cash out. So even motivation of keeping some safety money in liquid form, it's not there anymore. So there's immense pressure because it's a dying business for banks, and banks are very, very highly reliant on FDs. The reason why banks are reliant on FDs is a bank's liquidity is basically its FD. What does a bank do? It takes money from people who want to leave the money in the bank for safety and offers them a reward in terms of savings, interest, and in turn takes that money and lends it out at a higher interest rate and makes a nice spread in the middle. This is what historically been happening. But over the period of time, the banking industry has changed where the management and the bank manager were not shareholders and were not invested in the bank. They did not have stock options in the bank. All that changed in the 1970s. Me and Shashwat did a video about that in the US, how it changed. And because of that change, fundamental change, the way banks are operating and the way the relationship between the people running the bank and people who own the bank changed, where owners of the bank started giving stock options to people running the bank. This became murky waters because there was huge pressure on people down the line to perform and to meet targets and to make sure the profitability of the bank is held high. So this kind of gives you the context on why this guy had to do what he did. One, of course, is human greed. He wanted to make some incentives. The second is also if he didn't do it, he wouldn't meet his targets and he in turn could lose his job, or even worse, the branch itself could be unoperational because there's too many branches nowadays. So they might say, okay, this branch is no point having this branch because it doesn't meet our requirements of the basic deposits and transactions. So to prevent that, this guy, what he was doing was he would dip into accounts, targeting businesses which had current and savings accounts with people with a lot of money that was just sitting there. He would create a FD and close the FD, like how Bank of Baroda gold scheme was happening. And there was a Udaipur individual who discovered what was happening in this bank. And then instead of going to the authorities and calling this out and saying this is happening in this branch, this guy went to the bank manager and leaned on the bank manager and saying, see, if I go and tell this, everyone will know about it and you lose your job and you'll be ashamed. So he leaned on him hard and he made 2.5 crores in blackmail, in hush money. So all this was going on when the police started investigating. So when the police started investigating, they found out about this, creating overdraft against FDs and using these funds to fabricate transactions. And entry and reverse entries were all happening. And this whole thing has come out. Now, ICICI Bank, I don't know what they were doing. Were they caught napping, or the internal audits don't work, or it's just not enough auditors for these number of branches and the size of the bank? Because that also can happen. Like how you need to have ample number of people doing the job. Let's say if you have a large facility and you need security cover for that, you need to have ample people working for it. But one of the first places you cut cost is on this. You realize, okay, then I don't need to audit so many times. There's nothing that happens. If anything happens, we'll catch it. And they'll always have an insurance, these banks. They'll always account for so much of fraud in a year. Instead of saying we should not have any fraud, they'll always, in the balance sheet, they'll say, okay, so much of fraud is expected. Being human beings, they will commit some fraud. So they try to say this much tolerance is allowed. Believe it or not, it happens quite commonly and across a lot of industries, not only in banking, where they allow certain amount of rejection to happen in production also, where you don't try and reduce it. There's a tolerance for it. Of course, the bank has come out now, once it's all come out, and this is very shameful for the bank. It said they have zero tolerance for this kind of behavior. Their policies are very clear. They have zero tolerance, and they've suspended everybody and made sure, and they've told everybody, the investors, and they've told the public and all people who have accounts there that no losses to the bank, and there's no financial implication to the customers, genuine customers. There's no financial implication. But the police have seized assets linked to the scam and frozen 62 bank accounts with a balance of 62 lakhs and seized another 46 lakhs in cash, taken possession from the person in a farmhouse, and that has been partially financed by embezzled funds. So you can imagine, the guy came up with this scheme, he was taking money out, and then he was financed a farmhouse, and in that farmhouse he's been storing the cash. Begs to wonder, if this has been happening under the nose for years, what else is happening? So it's interesting news. Of course, it's embarrassing for ICICI Bank, but does beg to wonder what else is lurking under the hood and where. Because when times are tough, things are in a crunch, people tend to get innovative. So this is one of the ways people get innovative. So do realize this and be careful. I have been personally a victim of a couple of private banks. One was in Standard Chartered and another was in IDFC Bank. So this happens. It's quite common. One of the best ways to prevent yourself from getting caught in this is constantly keep an eye on your account. Don't keep dormant account. That's why RBI tells you constantly to keep updating your KYC, as they say. They tell you to keep dormant accounts, and they force accounts which are dormant to lock the accounts to prevent any transaction until and unless a customer physically comes and reopens transaction on those accounts. Yes, even with all those safeguards, these things happen. Do keep checking your CIBIL scores, because if someone's taken a loan out in your name or used your name in any fraud, it will reflect in your CIBIL score. So always going through your CIBIL scores with a fine-tooth comb, the report, seeing what all are there in your name, also gives a lot of clarity. And if you do find any discrepancies there, you should immediately approach the bank and approach CIBIL and tell them that these transactions are not yours and they're fraudulent. So you should also do your part to help lower these kind of instances in our country. Anyway, thanks for watching the video, guys, and I hope you found it informative and interesting. See you in the next one.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.